Well, the question on the economy really revolves around what people's assumptions are about the role of government. Clearly, the Obama administration has favored a much more interventionist model, intervention in the markets, intervention in the various financial sectors, um, uh, with the stimulus, with the bailouts. Now, the concern is that this is just too much government intervention in the markets. And certainly conservative free marketers think this is the worst thing that could have ever have happened. Again, we will see if this works. There are signs that there's some turnaround. The actual stock market has seemed to stabilize a bit. There's some sense that we're starting to see the bottom, but even as late as I think today or yesterday's paper, there was concern about the government buying toxic assets. Nobody knows what their real value is. There's concerns about fraud and scams. There's a lot of money being thrown around out there, and being able to account for it all is going to be very difficult, and we all understand that. So it's hard to say, and I think the fact is, anybody who says they can predict what's going to happen with the economy probably is not being truthful with themselves. The economists have been wrong so far. There's no reason to suspect that they'll be right now. So the question is this cyclical? Was this sort of a weeding out of weak players in the market, speculators and others who shouldn't have been in, and whether it's financial or mortgage markets? So will it correct, or will it take this sort of very active intervention by the federal government to get things righted? And even then, what will be the consequences for the global economy?